Hello everyone, this is Matthew Frailey with BreakpointTrades.com, bringing you advanced technical analysis and commentary on the markets, trade ideas, and mechanical systems since 2003. Okay, so let's go ahead and get right into this. This is the market newsletter for Monday, October 4th, 2021. You can see here the table of contents is divided into 5 major sections. Same general theme as I always keep. We'll first look at, before we get to the general market, we're going to discuss some of the mechanical systems, the SPY and McClellan systems, reversion to mean type systems. I'm going to make some comments there. Then we'll get into the general market, look at the S&P and the major indexes. We'll also look at those top 5 major stocks like Apple, Google, Facebook, etc. We'll look at a few market indicators, bonds, and the 10-year treasury yield, a few market sectors. We'll look at the dollar, various commodities, prices, metals, GDX, and a few individual names there. Now, as far as trade ideas, obviously I'm not going to give you guys a bunch of trade ideas in this environment. I am going to go over a few recent ones. I did add like 1 or 2 ideas, but that's it. All right. So as far as today, the bulls hope was for the market to have a follow-through on Friday's nice reversal, and that obviously did not happen today. Market opened to the downside and sold off strongly. Again, I'll get into that below, but if you've been following our videos or video commentary on YouTube, you know that so far we've done a pretty good job analyzing the market here. We viewed this initial sell-off in the S&P a couple weeks back is a wave A. We thought we would form a lower high wave B and come down again in a wave C, and that has definitely transpired. Again, we'll look at all that in more detail when we get to the market indexes below. So let's go ahead and move on to the systems. So the first image here shows you 4 charts. These are the McClellan oscillator systems with the Bollinger Bands. Again, these are straight reversion to mean systems. Whenever the McClellan oscillator falls below the lower Bollinger Band, you take a trade. When it closes back inside, you exit the trade. So they're typically really quick trades, rubber band trades. Today, the QQQ McClellan oscillator system took a first entry here. You can see some of the recent trades. So we'll see if that ends up being a nice trade. Again, sometimes these systems can have multiple entries before you finally get your reversion to mean bounce. Let me show you an example of that. So here's just a couple previous examples or past examples on the QQQ McClellan oscillator system. So here's an example. It needed 3 entries before you finally got your reversion to mean bounce. Clearly the first entry was a loser there. The second, third entry were a winner. Here's an interesting example. I guess this is 2020, last year during that waterfall sell-off. So quite interestingly, took 3 entries here, exited, winning trade, took another quick winning trade here, had 2 entries here, first loser, second one winner, and this one. But anyway, just to give you an example of how these reversion to mean systems, McClellan oscillator systems can change or can trade. Next, item number 4. So this shows you the statistics for that individual system. A profit factor of about 9.9. Again, that is derived by taking the gross profit divided by the gross loss. Essentially, for every dollar lost, it made about close to $9. So pretty damn good profit factor. 140 total trades, 80.7% winning trades, and my stats on this one go back to about 2008. On my S&P 500 McClellan oscillator system, my stats go all the way back to the 80s. But for this one, only back to 2008. That's as far as my data goes back on that individual McClellan oscillator. Okay? Next, moving to the SPY systems. I will be doing a separate video eventually on these systems. But those of you longer term members of Breakpoint Trades, we've had these SPY systems for quite a long time. We have 22 subsystems, so individual subsystems for the S&P. We have 10 subsystems long systems on this chart. We have 9 of the short systems here. We have various individual systems on their own charts. Anyway, with today's sell-off, there was no new trades on these. Okay, I had sent out an email about that. Next. So this shows you for this 12 individual long subsystems for the SPY reversion to mean systems. And again, no new trades today. We do have an open trade first entry on this QE BTS system. That did not take a second entry today. Should we sell off more tomorrow or this week, we could see a first entry trade there. Okay. But again, that's how these systems work, guys. I have 12 individual systems that look for longs. They're all doing their own thing. All right, now let's go ahead and get back to the general market. So item number 7 below shows you the index sector table, what transpired today. You know, as you can see, bloody red day for the major indexes. The S&P or the Dow and Russell 2000 were down the least, about 0.9%. The Nasdaq tech area was down the most, about 2.15%. As far as the major market sectors here, most of them were red as well, as you'd expect. Obvious strength in the energy here. They were off the highs, but still up nicely. That area has been absolutely on fire. We've had some nice long ideas there, and just continues to work. But it is getting quite stretched. The bullish percent energy index, BPDR, is at 100% now, and I'll show that when we get below. But it's basically a contrarian indicator, getting a bit overextended. Other strength, a little bit materials and utilities, not surprising. Currencies, US dollar down a tad today, 0.3%. Overall, though, the chart is bullish, as we've been showing. Cryptos, Bitcoin up today, Ethereum slightly down. Really nice reversal in the cryptocurrencies last week off major support. They essentially had ABC corrections, which I'll show on the charts when we get to them. Commodities, most commodities were to the upside here. Crude oil, nice day. That's been on fire lately. You know, natural gas up again. Copper up. Little weakness in the ag area. And precious metals were actually up today, believe it or not. They've been super weak. There's a few individual stocks there that look interesting to me that I'll discuss. As far as bonds, both high yield corporate and TLT were down. High yield corporate looks a little precarious, which I'll show you when we get to it. Next. Moving on to the economic news calendar. Again, a lot of news out there, guys. As you know, a lot of non-market type news. But as far as the economic news here, tomorrow we have ISM numbers. That'll be a big one. Of course, on Friday, we have the jobs report. We'll also be starting earnings season, I think, next week. There's a few companies that have guided down already, as you know. All right, let's go ahead and move to the index charts. So starting with the S&P 500, here's the daily S&P. And again, as you know, on that initial sell-off that we had in September, and September tends to be a weak seasonality point of the year, which we've been discussing. It's well known. We viewed that initial sell-off as an ABC of A. The rally up, we thought it would form a lower high, wave B, which it did. You know, went a little bit above its 50-day moving average, but again, we thought we had strong conviction we're going to form a lower high, and that's what happened, and we've come back down. This shows you the zigzag movement where wave A would be equivalent to wave C. That still measures down to about 42.25. It doesn't mean we're going to get there, but that's one target area. You also have a little support here. And of course, you have these 200-day moving averages now that aren't that far away that could also be magnets over time. It's just interesting to see how I'll have to see how this correction unfolds. But the 200-day moving averages are down here, especially on some of the other things that are much closer. Some of the techs, I think, still could be tested. And longer term, my concern is what the quarterly and monthly charts look like. And I'll talk about that below when we get to it. Next. Chart 10, another daily view of the S&P. On the weekend, Steve talked about this as a resistance area. Well, today we didn't try to rally at all. We had a nice bounce on Friday. We closed slightly back over that 100-day moving average, but below the 9 EMA. Remember, the 9 EMA is your short-term resistance, and we couldn't recover that, and today we lost it. We did close off the lows, and but if we get some further selling, watch this area. This was the support back here in July, and resistance here at the June highs. So this would be a target, but also at that point, you're also not very far away from your 200-day moving average. The moving average ribbon here, you can see how this is a very good guide. Kept you in the uptrend this year. It flipped, turned bearishly stacked there in early September. You had a perfect bearish kiss there on that oversold rally lower high. That was a great shorting opportunity. We do have some divergence a little bit on the RSI here. Nothing on the MACD at this point. Next. I had to fix that chart. There was an issue there. So moving on to image number 11. Here's a 2-hour view of the S&P. So you can see this ABC decline. We have some divergence building on the 5 RSI. Again, we are getting oversold a bit. We do have this should be probe lower tomorrow morning. We have a support zone here, and we'll see, guys. But let's move on to the next chart. Chart number 12, here's another 2-hour chart. Steve drew this and posted it early in the morning. So what he discussed was that if we did not have an immediate follow through on Friday's bounce, to expect another decline with the rally on Friday forming a wave A here. And we could be working over time lower in this wave C. Okay. Again, don't get too bogged down in this, but that is one potential target. Also, a perfect measurement of this overall A, B, C correction would measure down to about 42.25, as I showed you on the original daily chart. So we'll see. Again, the onus is on the bulls, guys. And we'll see if this ends up working lower. Short term, we are a little bit oversold. Next. Chart number 13, here's a 60-minute view. Shows you the breakdown of these wave counts a little bit. Don't get too bogged down in these wave counts. So this shows you potential Friday's high, wave B, and we're working lower in a wave C. Again, these corrective patterns can take many forms. Here I drew also could be a little wedge forming. But even over wedge, what you could see a bounce up and then maybe another decline, then a rally, something like that. We do have some obvious short term. We are a little bit oversold here. We have some MACD divergence on the 60-minute time frame. So like I said, we could be wedging here, but to me it doesn't look complete yet. Next. Chart number 14, here's a 60-minute view with the fibs. Note where those are. Next, chart number 15, here's a 15-minute view. 15-minute view doesn't really have a great look to it here. Kind of that sideways action late day to me still looks kind of bear flaggish. So I still wouldn't be surprised to see a little move down in the morning. Notice how your faster stochastic has already got fairly overbought here late in the day. I did add fibs here from Friday's highs. It's kind of a marker. Should we get a push higher tomorrow morning? But clearly, resistance is the downtrend line here. And again, I think any rally attempt here will still form a lower high and work lower. Finally, chart number 16, 5-minute view shows you how, we had a nice rally on Friday. This morning we gapped down. So we got no follow through on that Friday rally. Sold off for the first couple hours here. Big sell off, and then traded mostly in a sideways fashion. We'll see how this opens in the morning. Again, S&P ended up down about 57 points for the day. Next. Chart number 17, here's the daily KISS chart. Been pointing out that this weekly ATR here, and you can see we undercut it a little bit today as we did on Friday. So we're basically right around that weekly ATR. Haven't lost it on a closing basis yet. You can see the moving average ribbon. Nice bearish kiss, a couple weeks ago. Next. Chart number 18, here's the cycles. Here's your daily chart. Your 60 stochastic, that's one thing to point out. It's, nearing the oversold area finally. Otherwise, not too much shown on the other time frames. Clearly on the lower time frames, the ATR indicator is now resistance. Next. One thing I want to briefly discuss here is these quarterly charts. Again, Steve discussed them on the weekend. I discussed them last week on Wednesday at the end of the quarter. But guys, as you know, we had these ugly candles form at the end of the quarter. These spinning top doji candlesticks. And, especially from the March lows of last year, we've had a hell of a rally here. This is unsustainable long term. And with these doji candlesticks, notice I drew the horizontal line at the low of these dojis. Breaking that would set up a potential short if you wanted to take a short with a stop right at the high of the doji. Okay. These scare me because, just longer term, you eventually will retest the middle Bollinger Bands. And look how far these are away. This could lead to an eventual quite long consolidation, correction, deep correction in the market. Again, this is not something I'm immediately worried about, but because remember, each candlestick is a quarter, but this is something that could play out, say next year, perhaps. And this could be a fairly long consolidation. Moving on. Chart number 20, here's a quarterly view of the S&P. Again, you can see this doji here. We're still a ways from that trigger and below there, but just short-term reversion to mean. Here's your 5 EMA here, and just this is about 220 points lower. The 9 EMA, which you could see repeatedly test in uptrends, and many times undercut it, but the 9 EMA is what I call your mean, and just that is over 500 points away. So it's just something to put in perspective. Next. Chart number 21, here's the monthly chart. Steve discussed this on the weekend, this ledge support. He noted 50% of this candle. So one thing the S&P needs to do is take back more than 50% of this candle. That would be a start, okay, on the bullish side. But that's still obviously a ways away. It's early in the month. But, just a normal reversion to mean would have you at least back to the 9-month EMA. And you can see that's down to here. And finally, chart number 22, here's the monthly S&P KISS chart. And again, one thing we like to point out is how wide this moving average band is. I've looked and I've never seen it so wide. This will eventually need to be worked off. Okay. And that could take quite a long time to work off. Again, don't get me wrong, guys. These charts don't concern me in the very short term, but in the intermediate term, longer term, they do. This will take some time to work off. So these are some of the things that, again, concern me longer term. Next. Moving back to the indexes, here's the triple Qs daily. You can see we've been working on this zigzag. We hit this initial target, wave A, B, C. So we've hit that target, undercut it a little bit today. There is a support zone here going back to the July lows. My problem here is you have the 200-day moving average not too far away. You also have a thin zone here if this is lost. Again, we are quite stretched, oversold in the short term. So could we see a bounce? But my thoughts were if we get a rally here, it'll still fail, probably come down again, eventually test that 200-day just because it's pretty close. Then maybe we can have a better, oversold rally end of year. Next. Chart number 24 is the 60-minute view. Here I drew what could be forming a falling wedge. Now notice on this wedge, True wedges have 5 waves. You can only really count 3 here. So one thing we could see here, if we did get a bounce in the short term, a little bounce up, down again, and then a rally. So that's one option to monitor for. Next, moving to the KISS charts. So here's the KISS triple Qs. Now it did close below its weekly Bollinger Bands today. Take note. Next, chart number 26. Here's the various cycles. Again, not much to say here. ATR is your resistance on all these time frames, even on the short-term 60-minute. Next, taking a look at the FANG type stocks, the big 5, which have the huge weighting on the market, these big cap tech stocks. Apple, as you know, back here in September when it lost this support. First off, you had a nice MACD divergence there at the highs. So once it lost this support, I favored a rally and back test of this broken trend line, which is what happened. That was a good shorting area. And then I said, over time, I expect it to fall at least to this area, the April highs, but then, or the 200-day moving average. And so far, that is playing out. 200-day moving average is so damn close that it still would not shock me to see it be tagged over time before earnings season. Next. Chart number 28, Microsoft. So Microsoft had a perfect double top back here. It's still hanging on to this little support area. But otherwise, you shouldn't lose this area. You got a thin zone here, and then you got another thin zone right here. And at that point, you have the 200-day. Next. Chart number 29, Google. Now, Google was down much more today, came well off those lows. It got into that thin zone a bit here. And next. Chart number 30, Facebook, face crook. You all know the issue with Facebook today, but big sell-off. Again, you honestly think that 200-day moving average isn't going to be tested at this point? It's so close, it's sucking on price. Then longer term, that's your next support as well. You can see how the moving average ribbon turned bearishly stacked way back here. Next. Chart number 31, Amazon. This head and shoulder pattern look. Testing the neckline now. That's kind of an ugly chart if that were to play out as well. Moving on. Chart number 32, IWM small caps. Now this area is holding up better. Notice, again, we have this horizontal channel. It's been shading this channel all year long. We have a coil within the channel. One thing that I could see is happening is if the other indexes work lower before they put in a bottom, that this stays in the coil and eventually rallies up. So this is an area I'm going to be monitoring as a potential bullish sector. I think it's going to hold up better than the other sectors. Finally, chart number 33, there's the 60-minute view. Shows you those converging trend lines. Next, chart number 34, ADR International. I haven't shown this for a while, the rounded top. It is nearing this support area. Now we'll see if we can get some sort of bounce. My thought, though, is that probably a rally will still form a lower high, and then it may work lower. Notice there's a big thin zone right here. These are your big support areas below. Next, moving on, chart number 35, here's the VIX. So the VIX did not close outside its Bollinger Band today. In fact, the VIX was not up that much. Look how well that was off the high. So it's not easily going to spike out of those upper Bollinger Bands unless we just have a complete meltdown. Okay. Next, chart number 36, here's the VVIX. Just want to show how this has been a pretty damn good indicator. Whenever it goes above 110, that gives you early warning to get out of the market, which occurred back here. Just a couple bars off the highs. It fell back below 110 here a couple weeks ago. Then it went back above 110. Even on this big down day, even if you got out there, it was still a pretty good signal. Next. Chart number 37, J&K, high yield corporate, junk bonds. This looks precarious. Not a lot of support here. It looks like a bear flag at this point. That's a next. Chapter 38, TLT 20-year bonds. Steve showed this over the weekend. It had this coil going for the last few months. We marked it as some sort of ABC type correction. This shows you a complex correction working on a wave X and then eventually lower. This would also support higher long-term rates. So let's take a look at that. Chapter 39, TNX 10-year treasury yield. Now so far you've had a symmetry move out of this ascending triangle. You can see this initial move here, which basically perfectly matched this rally up here where we've pulled back. All right. Now, one thing I could see possibly, a little bounce, pull back, then move again. So that's a scenario that I'll be monitoring for. Next. Moving on to the market sectors, here's XLK technology. This probe down to this little support area today. Held that for now. Now below that, there's really not much until you get to here. Then, of course, you have the 200-day moving average below that. Next. Chapter 41, semiconductors had basically formed a truncated fifth wave here, selling off. Now this one's right almost at its 200-day moving average. So take note of that. Next, chapter 42, XLC tech communications sector. Notice that it's come down to this area here, probe below it, came back. There is some positive divergence here, but it still looks quite weak, guys. Even if it gets a bounce here, I still think it may want to work to its 200-day moving average. Okay, again, this has a lot of those big cap FANG type stocks like Google, Facebook, Netflix. Next. Chapter 43, the banks. They're a strong looking sector. Higher rates, of course, are bullish for them. Now, they were up nicely today initially, but obviously gave back some of those gains with the market sell-off. But the chart still looks decent. Next. Chapter 44, financials, also holding up okay. But again, it gave up its early gains today with the market sell-off. Next. Chapter 45, XLE Energy. Look at this move. I pointed out this inverse head and shoulder pattern a few weeks back, and it has played out nicely. Okay. Congrats to those of you who either bought the ETF or some individual stocks. Next. Chapter 46, the BPNER, that's the bullish percent energy index, went to 100% today. Now, that doesn't mean the sector sells off, but it is a bit of a contrarian indicator. What that means is that 100% of the stock components in the XLE Energy are on point and figure buy signals. So think about it contrarian. When everything is on a buy signal, it's time to be a little cautious. So, when it's down here oversold, that's time to look for buys. So it's clearly an extended territory. Next. Chapter 47, healthcare, been showing this, had this perfect double top we pointed out back here in September. Now nearing this big support zone back from the May, June highs. So could see a potential bounce here. But if it does, I still think the 200 may be tested just because it's not very far away. Next. Chapter 48, utilities. Nice bounce today. Remember, they were down 14 days in a row here. So you were statistically due for a bounce. So you did get a bounce. It's basically holding on to the 200-day moving average at this point. Finally, chapter 49, real estate. So, again, not much move today. That's your resistance. These are your support areas below. All right, moving on to commodities. Chapter 50, DBC. Commodities have been on fire. All of us are worried about inflation. You could definitely see it with the move in commodities. I called for a bull market on commodities late last year, and I have been right on that. Outstanding call so far. Next. Chapter 51, crude oil. Starting to take out this recent high. Not surprised. Over time, I expect crude oil to honestly go much higher, guys. Next. Chapter 52, natural gas up today, but off the highs. It's had a heck of a run this year. Next. Chapter 53, copper. It was up today, but it's still in this same coiling type pattern. Next. Chapter 54, CPER. It's the copper ETF. Should have drew a downtrend line here, but should copper start to rally with some of the other commodities, this is a way to play it. Next, Sharper 55 DBA was up initially today, but gave off those gains. Obviously a nice move out of this falling wedge. It is overbought up here. Next, Sharper 56 Joe, the coffee ETF, again, was up today, but pulled back a little bit. So far, it's been a nice trade, though, out of this coil. And finally, Sharper 57 URA uranium. This had a nice day going early on, but it gave those gains back with the market. So, again, if you're long based on this ABC, your easy swing stop would be right in this area. Okay? But it is kind of, this is an ugly candle here. So now we'll see if wave C is in or if this is going to be a more complex correction. Long term, I'm bullish on uranium, but I don't like this candle short term. Moving on. Sharper 58, Bitcoin. So Bitcoin, again, guys, had a perfect ABC correction into support. That was the time to buy some after this reversal. Nice move up out of this resistance. Looks decent. The bullish few years here, I mean, guys, either way, this could be a wave A up, wave B, and it could be working on a wave C. The more bullish view would have this as an impulse up. Either way, this looks like it probably wants to take out these recent highs. Next, Sharper 59, Ethereum. It's also had an ABC correction. Nice move off those lows. Next, looking at a few Bitcoin type stocks. GBTC follows Bitcoin. Nice wedge. Should that area continue up, which I think it will, this is a way to play it. Next, Sharper 41, Mara, one of the best of the bunch. Trying to bounce off its 200-day moving average. Here I drew a downtrend line to monitor. Next, Sharper 62, Hut. I've been mentioning that this is one of the standouts technically in that sector, and you can see how well it's been performing. Next, Sharper 63, UUP US dollar. So it's had this nice bullish pattern. Moved out of that. It's pulled back. Now it's pulled back to this previous breakpoint support. Is this an area for it to find support and rally, or is it going to, pull back more into this? But this is an area to watch to see if it can find some support. Next, Sharper 64, FXE Euro. I drew this head and shoulder pattern months ago, and so far this has kind of played out. Next, Sharper 65, gold up today. I want to see still improvement in the GDX-GLD ratio. It's got a lot of work to do. As far as divergence, we did have a little positive divergence on the CCI indicator here. Notice back here we had a divergence in the CCI right here, and that did play out for a bounce. Next, Sharper 66, silver. Steve drew this downtrend channel on the weekend. I think that's the best pattern to look at. Next, Sharper 67, GDX on the daily. Little bounce. Again, it bounced off this lower trend line last week, but it's got a lot of work to do. Next, Sharper 68, 60-minute view. I showed this falling wedge pattern last week, A, B, C, D, E. And we have got a little move out of that so far. Swing stop at this point could go right around here. Let's take a look at some individual names that stand out here. So Sharper 69, HMY in the golds. I really like this. This is a textbook A, B, C, D, E falling wedge with MACD divergence. I own a little bit of this. I said so last week. Now we'll see if it can bust out of the pattern or not. Next, Sharper 70, IAG, another one I've been monitoring. I like this potential basing action, volume patterns. The ratio looks decent. I own a little bit of this one. And finally, Sharper 71, GSS, low-priced one. There is a beautiful coil setting up. Now, this could break either way, but I am monitoring this for a trigger trade. Finally, guys, let's move to the trade ideas. Sharper 72, SOXS. We've had this as a short idea for the semis. Triggered last week. It's done well, as you can see. Next, Sharper 73. All these energy names have done well. DVN. This is a long for the watch list a couple weeks back. The breakpoint right here at 31. Look at this move. Awesome. It was a nice looking chart. Next, Charter 74, ExxonMobil, same deal. Beautiful move out of that coil. Next, Charter 75, HLX. This one was a little whippy down here, but if you stayed with it, it had a nice move the last couple of sessions. Next, Charter 76, CYTK. Here's another one I talk about giving some of these trade ideas some wiggle room. This triggered back here as a long. Pulled back a little bit, basically held the 9 EMA on a closing basis, and ended up coming back for a winning trade. Next, Charter 77, OSCR. It's been a coil on the list for a while. It was up initially today, but gave it back. Kind of an ugly candle here. Again, that happens, guys, especially in this type of market. So this is one you may have bought today and then stopped out of. That's what happened with me. Next. Following up to some of these other ones that Steve was showing, UPS, you can see it's fallen now to fill this gap. Next, Charter 79, CMG, broke this shelf support last week, still looks weak. Next, Charter 80, QS. Here's what I'm monitoring to see if it finds support here. It had a nice volume move, big volume move up here off this base. It's come all the way down. The volume has been light. I want to see if it finds support here. Notice your moving average ribbon is now pinching from a bullish configuration. Again, I need to see a trigger. Next, Charter 81, Nike. It's at the 200-day moving average here. Can it try to bounce? We'll see. Let's take a look at a 60-minute time frame. Here's a 60-minute. So this is how I would trigger. A potential ascending triangle here. Resistance around this 148. Okay. All right, guys, that does it for this evening. We will see what happens the rest of the week. Talk to you later. Have a great evening. Thank you.